Hello everyone and welcome to today's video on sterling CAD, pound Canadian dollar. As you can tell from the title, this is in reference to today's retail sales data out of Canada and the two very different paths which the two countries seem to be on in regards to the consumer. As we can see from today's retail sales figure, there was a miss on the headline retail sales number, rising by only 0.1%, with the previous number actually being revised down slightly. But it was core retail sales where we saw that real knockout figure, rising by 0.7% against expectations of flat growth. And the response to that has been very positive, especially in the pound Canadian dollar pair, which isn't one we typically cover in the weekly videos, but it is one where we have seen probably the sharpest reaction because, as the title says, we're seeing very different situations with regards to the two slowing consumer spending in the UK over the course of the last year, with the squeeze on earnings, real earnings, having an impact on spending activity. But in Canada over the past 18 months, really, this has actually been gradually ticking higher, and today's numbers are a fine example of that. Now, the pound has seen some strong moves against the number of currencies today, not really off the back of anything in particular. I think we're seeing general weakness in the pound as a result of these changing outlooks, of people's changing outlook from the Bank of England because of the latest inflation data. So the weakness that we're seeing in the pound today, coupled with the strength we've seen in the Canadian dollar off the back of the retail sales figure, is why we've seen such a stronger response here with the pair down almost 1%. That move actually helped take us considerably below this support zone around 162. This had been a support zone since the start of February. We did break below here briefly previously, but really struggled to gain that momentum below. And I think today's number has helped trigger a much sharper move lower. What this means in terms of this pair is I think we could be looking at around these kind of 157.50s, 158s. You can see here 157.50 of course marks the most recent low from January this year, actually the 2017 low. But then going out in the longer term, and I think it's best to see this on the weekly chart, to be honest, you can see that we have got this kind of very gradual uptrend. So what I've got to these two rising trend lines here from the May 2010 lows are just two speculative trend lines at this stage. The first one actually does look to touch briefly or come close to touching the March 2013 lows, as well as the lows from the start of this year, but was broken prior to this. So again, I still refer to this as speculative. The other one only has two touches, and that's the 2010 lows and also the lows from 2016. So at the moment, because there's only two touches, we are only referring to these speculatively at the moment. But the fact that they roughly line up as well with the most recent lows from September and January is why I am keeping a close eye on them. I think this low is your first test, so 157.50 through 158, the 158 of course being that speculative trend line. If we reach this kind of zone, I wouldn't be surprised to see it find some support, especially considering the gap that we're looking at here between the level we've broken through today at around 162 and those 157.50s. Of course, that is a very considerable drop, and we are likely to find some support along the way. I think, for example, here around the 159.50s, this previous low could offer temporary support. I think we've already run into support around this previous high as well. So there's probably more than likely going to be support around the kind of 160s, a psychological support level as well. But really, the break of this, and I think that's why it's taken such a big effort to break below here, potentially suggests that we are going to see a much sharper move lower. You've also got this kind of head and shoulders pattern here. Now the head is much bigger than the two shoulders, but I think the two shoulders are pretty clear here, going to around these kind of 166s and above. So a break of this kind of looks like the break of a neckline of a head and shoulders. The only downside really here is that it's taken place in a downside trend. So I'm not going to read too much into this, but that may be what's helped take it so long to break through these kind of 162s. But we have broken below now, and I think 157.50 to 158 is considerable. The previous low below that from September, October of last year comes in at around 154.50 to 155. That's not just last year's low as well. Again, if we zoom right out here, you can see that this was a notable level of support on a number of occasions, gone back to 2012. You can see from March 2012 as well as August 2012, and again just before we broke below here in February of 2013. Then when we broke above again in May 2013. So this is a very notable level of support. So should we get this back towards these kind of levels, then I'd expect these kind of I'd expect 155, 154 to be a very considerable level of support. But again, we're very far away from that. We're getting well ahead of ourselves. But what is clear is we've broken through a very notable, a very considerable level of support today, completing the move which we've seen attempted over the last couple of days, and that looks to be very bearish for the pound Canadian dollar, just at a time when we've seen similarly bearish moves for the pound. In, for example, the euro, we've just broken to a new high, a multi-year high, and in the dollar as well, we've just broken to in the cable pair, we've just broken to a new low. So this negative pound moves coming at a time when we've got some positive Canadian data and a negative breakout for the pair. Does seem to suggest that there's a lot more downside to come in this pound Canadian dollar pair. For more in-depth news and analysis, check out OANDA Market Pulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.